Ladies and gentlemen, welcome back to the channel. Tesla stock on Friday was up about 0.5%, encouraging that Tesla closed above $200 per share. Here in this video, I will share a clip from Tom Lee where he expects the worst of the selling is over with. We do have some Tesla stock news to also go over. And broadly speaking, what is Wall Street saying about our markets? So first things first, let's start with some Tesla news. And this is probably the biggest news that we are seeing today. It's from Uber's CEO, which, yes, stands to lose the most if Tesla's Robotaxi business is a success. Uber could get wiped out if they don't partner with Tesla or find some way to work with Tesla and Robotaxis. But Uber's CEO on the idea that Tesla owners will rent out their vehicle as taxis when they aren't using them. Quote, "It's not clear that the average Tesla owner would want to have that car be ridden in by a complete stranger. Probably the times at which you're going to want your Tesla are probably going to be the same times that ridership is going to be at a peak," he said. Uber's CEO said, Uber can quickly adjust the number of part-time drivers to meet demand during rush hour or large events. He also said Musk might be underestimating a key part of the business. He said building a $50,000 piece of hardware is a very, very different business than driving over 30 million transactions every day. There's also the consumer service side of things, like when someone gets sick during a ride or loses an item in a car, he said. And I think Uber's CEO is correct, at least on the last part. There's going to be those instances that are challenging. There's going to be problems that come up that Tesla's going to have to find a way to solve, a warning system potentially that, that check your surroundings, something along those lines, especially when it has to do with people forgetting an item in the car or whatnot. But that's not an end all be all for the business venture. And I think that's where Uber's CEO, was really, I guess, messing up here. And Uber's CEO continues that he has doubts that the Tesla Robotaxi plan will work, but is still willing to collaborate. And I mean, let's be honest, Robotaxis, they're going to be the biggest value creation the world has ever seen in the shortest amount of time. When the Robotaxi network does actually open, and it opens broadly speaking, it's going to be the biggest thing you've ever seen before as far as value creation and honestly, to change the world, right? Much the same way of screen phones like iPhones revolutionized the world. This is going to be just as big. And the fact that Uber's CEO is even talking about this, one, shows good leadership over at Uber. I am thoroughly impressed with Uber's CEO. The fact that, he's addressing this issue that it could be a business buster kind of issue. And also that he's willing to work with Tesla. I think Tesla would be willing to work with Uber as well. So don't be surprised if some kind of partnership comes up in the months to come. It does sound like we are inching towards an Uber-Tesla partnership. Let me know your thoughts on that down below in the comment section. Would it make sense for Tesla to partner with Uber? It would obviously make sense for Uber to partner with Tesla, but does it make sense for Tesla to also partner with Uber? Martin Viecha responds to this post from Sawyer Merritt and Uber. It says, reasonable points. I agree that the biggest challenge is that supply of available Teslas would be inversely correlated to the consumer demand curve. People would make their cars available when they're not using them. So in most cases outside of peak travel times. And I do think the Robotaxi network will operate in a way that kind of like the power grid does in charging your car, right? If there's peak power during the day, then it costs more to charge your Tesla. And that incentivizes people to charge at night. I think the same will be true with the Robotaxi network. I think if you lend out your car during the day, during peak hours, then you're going to get paid more than if you, lend out your car at night or, late afternoon when it's not as peak hours. And you would be surprised how many problems that could inevitably fix when we get to that road. It wouldn't surprise me if you could make double, like twice as what you otherwise would if you're lending out your car during peak hours. And then the real question is, if you are a Tesla stock investor, because again, the whole concept of Tesla is dependent on the Robotaxi network in terms of your investment. I think the real question is, are these fixable problems? Are these solvable problems? And the answer is yes. The hardest thing is developing the software, getting the software to a point where you can flip a switch and have your Tesla perform Robotaxi rides. It comes back to you when you want it to, and that's that. Yeah, people are going to get sick in the car. They're going to lose things in the car. What if the car gets pulled over? Like, what do you do in that scenario? I mean, there's a lot of edge case scenarios that you can think of out there. What if it, hits a deer, right? There's a lot of deer where I live. What if the car hits a deer with someone in it? Then what do you do? Does it call the police and make a report? What happens in that scenario? Those are all solvable problems in one way or another. As long as you can get the software developed, the rest of the problems will just fall into place and there will be solutions for them. And in terms of Tesla stock, whether or not it's a good investment right now, even in the short term or medium term, long term, Tesla is going to be a phenomenal investment. But in the short term and medium term, we do have the Robotaxi event on October 10th. And I think you're going to get a lot of excitement heading into that event. I think, if we rally into that event, we probably sell off after. If we sell off into the event, we probably rally after. That's usually the easiest way to play events around Tesla. And again, in the short term, medium term, we just want guidance on the Robotaxi network. When is it coming? How soon is it coming? How certain is the Tesla team that it is coming? As long as we get guidance, then I think Tesla stock will do very well in the short to medium term and potentially even still hit new all-time highs because by the end of this year, because the opportunity is just so massive around the Robotaxi network. And I don't expect that it's going to launch overnight everywhere. I think that's a false reality. I think that's great promotion of the Robotaxi, but I don't think it's actually realistic. There's going to be regulation hurdles. There's going to be different hurdles in different places. But I do think the cities that already have Robotaxis operating in them, there's a select, couple of cities, but large cities, San Francisco, Phoenix, Las Vegas, right? And, other cities that are more open to this, like potentially New York, that granted Tesla a approval to start testing some Robotaxi like services. Potentially Miami or other big cities would also be some of the first to get the Robotaxi network. And I think that's all you really need at first to get Wall Street really excited about the Robotaxi network. So in terms of your investment, I don't even think you need to see the Robotaxi network everywhere. That's long term. You just need to see it go into operation somewhere. And whether or not we get guidance of that on October 10th, that is what is going to move Tesla stock over the next coming months. Now, with that said, we did go into a pretty aggressive sell-off for markets, and we've started to bounce back at least somewhat. It is encouraging for the bulls. We closed above the 100-day moving average on Friday, closed, pretty well on the day. Not near the high of the day, but you didn't give too much of it back into the close. You definitely wanted to close at the high of the day, preferably, but it still looks pretty good from what we've seen on Friday. Now, Tom Lee went on CNBC last night, did about a Well, this clip's 5 minutes. The interview was about 10 minutes. But Tom Lee expects that most of the selling is already done, that these summer lows are likely already in. So I'll play this clip. Let me know what you think about it afterwards.
And whether this rebound really can be trusted. We're all wondering that, of course. So let's ask Tom Lee. He joins us now live. Welcome. It's good to see you.
Great to see you, Scott.
So I look at your notes today, and you suggest the worst is behind us. What makes you think that?
Well, I think the thing that we're watching is the VIX spike to 60 on Monday, which is the third highest reading ever, and the VIX futures curve inverted, which was the steepest inversion since the pre-pandemic times. Both are starting to normalize. I think the VIX, as it closes below 20, and it hasn't closed yet, and as that VIX futures term structure uninverts, that tells us the worst of the panic is behind us. I don't think it means we won't have ripple effects, because we know there's some trapped bulls, and there's still some nervousness around Iran and how much of this yen carry trade has to unwind. But I think the worst of the selling pressure is behind us.
How do we know that we had just a growth scare and not something more dramatic to come, Tom? Never mind the unwind of the carry trade, and no one really knows whether that's over either. But when you think about those two events, what does it make you think about where we could go moving forward?
Well, I think investors, when it comes to the growth scare side, have something they can check every week, which is weekly jobless claims, because that's what was a positive surprise on Thursday. And a lot of it came from Texas. Texas had a big drop in weekly claims week over week. The fact that markets reacted so positively Thursday to that jobless claims number puts me in the camp that that's one of the big drivers, because we had a better than expected claims number and then the market popped. I think the growth scare is what's on investors' minds. And next Thursday, they'll get another weekly claims number. And if that's also equally improving or stable, I think it's going to give people a lot more conviction.
What about the unwind of the carry trade? I mean, there's no real tell as to whether that's run its course, and that seems to be, the obvious catalyst at the beginning of the week for positioning being well off sides, and it just needed to correct itself. Has it finished?
Scott, that's a great question. Nobody knows how big that carry trade could be. I think there is a large insurance industry participation in that, and I did speak to some insurance executives this past week. As their view is, there's a lot of financial institutions that actually implemented this trade, but if it unwinds in an orderly way, it's not disruptive. It's just that if you have weeks or days like Monday or last week, the end of last week, that's very disorderly, and that gets very expensive, because these insurance companies have to take off these hedges, and then they suddenly have unhedged carry trades.
Well, I just want to continue this. You suggest, if it unwinds in a messy way, there's no if. I mean, we saw at least the first reverberations from that unwind, and that was anything but orderly. What if there really is more of that to come, Tom?
Scott, there may be more of it. I think one thing that is been messy is the currency hedges, because these currency hedges were built for what you'd call like 1 percentile events, 99 percentile standard deviation. So a bigger move than that is what makes these hedges so expensive. They just let them expire. I think central banks can manage currencies within a 1 standard deviation band. So I think it's still important to watch currencies, but if we're staying in stable and predictable ranges, it can be a orderly unwind. But yes, Scott, that's an uncertainty, just like the Middle East is an uncertainty as well. But markets climb a wall of worry.
Yeah. What do you make of how this week began? Not with necessarily the market upset, but the commentary around it, whether it was Jeremy Siegel of the Wharton School suggesting the Fed needs to come out and do a 75 basis point cut in an emergency way. Of course, he walked that back with our own Jeff Cox yesterday evening. Ron and Sana at the beginning of the week suggesting the Fed needs to come out and say something that essentially we've got your back from a liquidity standpoint. Do they need to do something before September's meeting?
Scott, I think both comments from both Ron and Jeremy Siegel are actually valid, but to me, what it speaks of is I think the markets and I think economists are no longer willing to deal with data dependence. I think they want a Fed that's more forward-looking, because that makes them comfortable the Fed could respond if conditions deteriorate. I think that's the kind of language I'd like to see disappear, is we're data dependent, so that by necessity they're going to be very late. I think it's actually encouraging to see this sort of pushback.
And Tom Lee also did go on in that interview to say he still thinks the Russell 2000 could rally 50% by the end of this year, as long as the economy holds up and the Fed starts to cut rates, as the markets are pricing in still a 50 basis point rate cut for September 18th. And if Tom Lee is eventually correct on that call, that would also benefit Tesla a lot. I mean, Tesla is the most interest rate sensitive company in terms of, it's 80% of its consumer base uses loans to buy Tesla. And it's also doing a lot of investments. So those investments become cheaper as treasury yields fall, as the borrowing costs do fall. And that is good news for Tesla as well. I actually think Tesla's profit is going to explode when the Fed starts to cut rates, as long as we are not in a recession, because just the easiest thing you can think of, if Tesla wants to continue to offer these low rates, as the 10-year treasury yield falls, that's less rate that Tesla has to buy down. So Tesla right now is buying down. If you consider the 10-year treasury yield is at about 4%, let's say there's a little bit of parity to that. Just for simple math, let's call it 4%. It's probably somewhere closer to like 4.5% or 5% that Tesla is getting their rates for, and then Tesla's buying down the rate to 2% for Model Ys or Model 3s. That's anywhere from 2 to 3% that Tesla's buying down on the rate. That can be expensive, right? But to offer these low rates, someone has to do it. Someone has to buy down the rate, and Tesla is doing that. But let's say the cost of capital becomes 3% for Tesla. Let's just assume. Then Tesla would only need to buy down, let's call it 1% of the interest rate. That's saving Tesla 60% on their buy down just based on that alone. I mean, that would be a huge boost to profitability. And as I've talked about before, when you put stress on a company like Tesla's had stress in recent years, you become a very lean machine. You become a operational, efficient machine, and you get your cost of goods sold down, which has come down for Tesla every single quarter in the past 8 or so quarters. It's become cheaper and cheaper to produce a Tesla, to build a Tesla. And when those rates do start to come down, there could be some wiggle room for Tesla to even raise prices. It obviously depends how much rates do fall and what the economy looks like. But that could also be really good for margins as well. And call me crazy if you want to, but I think Tesla could actually have the best margins we've ever seen in the next year or two. And I think that's going to explode profitability. And even on a, just a, profitability metric or a normal way of valuing a company like price to earnings ratios, Tesla could be a lot cheaper than we even think it is today a year from now. Kind of like Nvidia that just continue to raise. And next thing you knew, you were buying Nvidia at 70 times earnings, but a year later it was trading at 20 times earnings. You were actually buying Nvidia for like 10 times earnings back in, 2023, right? I think there could be something similar, maybe not as extreme, but similar that happens at Tesla. Maybe you think you're buying Tesla at a 60 times, forward multiple today, or 55. It fluctuates. But maybe you're really only buying Tesla at a 30 times multiple today because the earnings are going to, come in better than expected over the next 4 quarters. And that will obviously change things for Tesla in a very dramatic way, because it's been a long time since Tesla has been actually able to impress on profitability on earnings, to be able to grow those earnings, to become an earnings growth story again. We haven't seen that in a long time, and I do think it comes down to rates and ultimately what the economy is doing. But I'll tell you right now, I'm a little concerned on the economy. I am. And we'll talk about that a little bit more at 8 p.m. Eastern Standard Time tonight. Nonetheless, as I have said many times and now here on this channel, I think the only thing that really matters in terms of markets is economic data, for better or for worse. Now, unfortunately, I think the markets are still priced for pretty good data. So sure, could we see a bounce back on really good data, economic data? Yes. Are we going to new all-time highs though? No. I think the upside is to somewhat limited at that degree because your expectations for earnings for 2025 are still sky high. Wall Street has not adjusted earnings estimates lower, even though we did go through a 10% correction. But if we get data that surprises to the downside, there could be a lot of pain for equities. And I do think that is the biggest risk for markets, as Tom Lee was calling out those initial jobless claims. I think that's only an important, data point when we don't have any other data. Coming out next week, we have retail sales. You have all kinds of different, more hard data on the economy that Wall Street's going to be paying attention to. And I think specifically Thursday is going to be your biggest day. And if markets continue to bounce into Thursday, I will be looking at some hedges. Let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. If you guys also want to come trade with us live in real time, check out that link down below in the description of this video. You guys have a great rest of your day, and I will see you in the next one.